Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. I did a morning call at around 7:30, and I figured I'd just follow it up. I said I would after Fed Chairwoman's Yellen statements. And to make a long story short, she didn't really address everything that's going on around the world. Her blanket testimony, I think, was a little just even keel. She didn't say anything much different, and I think the market wanted her to address what's going on with the negative rates, what's going on now in Japan, what has been going on in China, oil, this, that, and she basically, didn't say much. So, I think take that off the table. So, in my opinion, I don't think much has changed. The futures are up 15 handles. We probably would have been up 15 handles based on Europe bouncing, Deutsche Bank up 10%. So, we're back in that market where you got to watch the oscillators, you got to watch the pivot points and figure out kind of what's next. So to make a long story short, the futures are off the highs of the morning. I don't know if we just could short and fall apart, because if we opened up and went red today, I feel like every technician in the world would say, you know what, it's over, and then new lows are coming sooner than later. If the market holds up a little bit today and they can't just fade them down, there's a chance that we try and work a little bit higher, and then there'll be some grudge match spots. So real quickly, take a look at the chart at the SPX here. Some are still saying they think that this 2-day, this type of move that we're seeing now, like this was August, September. Your low failed once, came in, your higher low, took this pivot out, with force, and then, kind of like paused and continued. So they're trying to do the comparison where you have, the red dog reversal here with the low. At this point, here is your higher low. Okay, look versus that. And now the question is, can you see the same similar pattern? I kind of don't think it's the same, because look how, we reclaimed the 8-day right after the first pivot, and then the 21-day where that's up here. So I think for today, this is your don't pass line, which we're still playing with. You have, 1873. If we stay around 1873 and hold around there and don't just fail, there's a chance you probably see this 1884, which would be resistance, where I think if you're long from in the hole the past 2 days, you probably sold half like I asked you to do this morning, and then this is a spot. And then if the market really wants to push the envelope a little bit, perhaps it could get up to this area at some point before really turning down. But I hardly think that's going to be the case. Actually, you draw your line here. What is this? This is 1897. So resistance 1, where if we're really that weak, we fail here, you put some kind of topping tail in, and we close below this high here, and then I would think that looks pretty negative. Okay, that could happen. If this doesn't happen and we push up and we close sort of strong, maybe there's a little bit more of a push into this area before figuring out what's next. I know it's not, I'm not giving you a blaring opinion, because I don't really have one right here. I just don't think she said enough to make the market up 300 points today. Maybe, we retrace a little bit of the move again, because Europe up 2% or so. Deutsche Bank didn't wake up today below 10. It's up 8%. And we'll see what happens with oil. Oil was a little green. Now it's red. So also want to see what happens with the Qs. Qs, I would say, same type of thing. Here's yesterday's high. See if it could stay above that, and then this would be a wall of resistance. So if they want to stay really weak, the Qs stay below the 8-day. If they want to push the envelope a little bit at some point, let this go a little bit further. Here's a 21-day, which we did touch on a bigger rally. So again, very broken, but do we do any reversion of the mean trade back to test the moving averages, or could we not even be able to do that? Then you have high beta tech. Each one of them are gapping up a little bit. See if they hold and then keep a majority of their gap and go, and if they don't hold the majority of their gap and they fill it quickly, chances are, again, still in the same tape where you have to be very quickly, only buy extremes and sell rallies pretty quickly. Facebook did get some news that they weren't accepted in India or something like that with the net neutrality. So see what happens here. See if this 2-day pivot becomes real resistance here. Okay, if it happens to get above it, you have a lot of resistance right there. So there's not much room, I think, here for Facebook to bounce, off of the low. No one's going to be in a rush to buy these high valuation names, etc. So, I'm going to watch to see if this could hold up or fade. I might even think about shorting it myself, in the first 15, 30 minutes if it puts a high in and I see a divergence. Netflix also, gave you your buy in the hole, and the question is, what does it do here? You see the 8-day moving average has been in control of this trend for a long time. So does it, get into here and get rejected, or does it push above it? And if it pushed above it, there's a chance that you could see a little bit higher into the 90. And then this is the 21-day, which rejected it up here near earnings. So, that would be a big rally. So you also probably want to watch the banks. The banks are all going to be gapping up, so see if they hold and push. That'll, work with sentiment. And then I said oil. So at this point, if you didn't, buy the market the last 2 days, 20 handles in the hole, be very careful buying the market up 20 handles, with the 40-point swing. There is some room to bounce a little bit further. Markets, in my opinion, is still very broken, but we'll see what's next. Sentiment is really, really gloomy, so when sentiment gets that gloomy, maybe there's something that could be in the works. And if you have no complete conviction today, which I actually don't, I had more conviction yesterday at 3 o'clock when I said gun to head. I think they push the envelope and get the spiders to 187 to 188, and that happened pre-market. Now, that's resistance 1. Can the market see resistance 2 or higher? It's got to prove itself that it can. So if you start shorting too early, we know how freaking crazy it could be if they push you through. Same way if all of a sudden, market starts to fail and you're like, I'm going to buy a little bit here, you can get run over. So let's let the 15, 30, 60-minute ranges establish themselves and then see what type of day we have to see, where we can go in the next few ahead. Hopefully this helped, and I'll see you on the virtual trade floor on Twitter and at the recap. Good luck today.